joining the Everest Metals shareholder and investor webinar. Today we are going to hear from Executive Chairman and CEO Mark Caruso and Simon Phillips, the Chief Operating Officer. There is the ability to ask questions as we go along. So down the bottom, there's a chat function which says Q&A. Press on that, send the message through. It's not public, so you can ask questions and we'll get through as many as we can at the end. So Everest Metals, EMC is the ticker, and I'm going to hand you over to Simon Phillips to kick things off and start the presentation. Simon?
Yeah, thanks, Mel, and thanks everyone for joining us today and for your interest in Everest Metals. We have three West Australian-based projects. The first is in the Murchison area. We call it the Revere Gold Project, a well-known alluvial gold field that Everest is looking to unlock its geological secrets as we move along. And just out of Payne's Find, we have our critical metal project at Mount Eden on a mining lease, and Mark will take you through the uniqueness of that project as we move on. And thirdly is our second gold project, our Mount Dimer Taipan gold project. And we look forward to sharing just an update on those three projects with you today.
Very good, thank you.
Yeah. So yeah, look, I guess as we kick off, Mark, with the Revere project, we're pleased to have our Executive Chair and CEO Mark Caruso with us. So we're pleased to be able to share an update.
Very good. Thank you very much, Simon, for that introduction. And thank you, Mel. And very good. You have to forgive me. We're having some technical difficulties in relation to video, so hopefully everyone can hear me. Yeah, so as Simon said, the EMC has got three projects, and we'll take you through those. The first of those is the Revere Gold Project. It's an area which is about 100 kilometres north of Meekatharra, just off the Great Northern Highway, circa 6-7 k's off the Great Northern Highway. It's had various exploration undertaken over its history by multiple companies. We picked this asset up from Mineral Commodities, where I was the former executive chair, and where we'd done an 8,000 odd metre RC program on it. The enigma of the Revere project is the nuggety effect of the gold and its occurrence. You know, it's I guess it's classified as an epigenetic gold formed in pre-existing rock, and host rock is siltstone and sandstone, and the structures have all occurred via hydrothermal mesothermal fluidisation along a shear hosted system, and that's called the Revere shear, and that's there. So we've done a good job of firstly consolidating the tenements, and we've done that, and we've then gone around about actively exploring it and trying to unlock that enigma. Initial exploration was done on the basis of looking for some deep Degussa-style copper VMS deposits, which were done about 18 months ago, and then we progressed to unlocking the near-term value of the gold. There's some various exploration targets that have been given, and basically first stage of that is to try and find circa 350 to 400,000 ounces of gold into an inferred and indicated resource categorisation. To that end, we've already identified 600 metres out of a possible strike length of 7 kilometres, which we'll get to, and how we're going to continue to test that. It's effectively a repeatable saddle reef system, Bendigo-style mineralisation, high-grade reef systems with what we believe now is impregnated siltstone and some good, and some good mineralised areas outside of that siltstone area. So where we're at, there's been significant drilling done on it. We've identified only 10% of the 7 kilometres. We're concentrating on that 600 metres. There's a 36,000 tonne bulk sampling program which we commenced, and that what we're trying to do there is sort of is get a better understanding of the distribution of gold for what we call nuggety occurrence of gold. And today, then, what we do is we effectively come in and we have trenched the area before. We come in and we do a very close pattern drill and blast pattern, and then what we do is we then blast that, dig it out, and then we put it through what we call a gecko gravity gold plant, which effectively gives us will result in a grade, a more representative sample grade of what is occurring. In other words, we even out the nuggety effect of the gold. So that program has been ongoing. If we just flip over to page 6, there's significant high-grade reef systems that have been identified through previous artisanal drilling and our own follow-up exploration testing and assaying. And as you can see on there, as I said, there's a 700-metre, pardon me, we've got about a 700-metre zone that we've identified out of a possible 7-kilometre strike, which extends both to the south and the north. Big tenement holding, and we've got that well packaged up in the event that we find or should I say, extend what we've already found. As you can see, some very high target zones, and now what we're trying to do is just understand the occurrence of that. Mineralisation is to 135 metres from surface. Gold is outcropping from surface, and we've identified this recent bulk sampling 36,000 tonne program has identified not only the reef system, which we knew was occurred in the high-grade occurrence of gold in that reef system, quartz system. We've also identified siltstone, impregnated siltstone, and also some other zones that sit outside of that are consistent with a structural control and anticline structural control across the Revere system. So basically, what this program is supposed to do is deliver us a maiden JORC compliant resource across that 700 metre identified zone. Concurrent with that, as Simon will say, as we just click over the page there, you can see some of the results we've got from that, it's very high grade. Those are the reefs, but what we're trying to do now is understand the distribution of that gold as it occurs out of the reef system. So no doubt plenty of high grade reef systems. We could mine that singularly, however, as a high grade deposit. However, we're not going to do that. We're going to probably, the results of the bulk sampling have indicated that we have probably a very large system that's got a very large gold mineralisation through it, and we're probably going to end up what we call a bulk mining program. We're going to end up with a bulk mining program, which we can do simply because there's a low stripping ratio. Gold occurs from surface, pardon me, it's gravity gold. So in other words, it's effectively we're able to simply crush this material, primary crush it through an impactor, put it into a ball mill, grind it down to sort of sub 200 micron or just 250 micron, and the majority of the gold liberates without chemical. So, we don't have those high costs of CIL processing. So if we just move through to the next slide, you can see that probably gives you a very good indication of what's been going on. We've got if you can see, we've got the two bulk sample target areas. We've got the infill drilling that that's been undertaken in the past, and as you can see, we're now trying to unlock that gold gold system in terms of understanding the exact occurrence of the gold and the distribution of the nuggety gold. Effectively, nuggety gold is you can drill a hole and you might clip the edge of a high-grade vein, which might give you these high-grade hits, which we've had, but you could, if drill holes off, you might just miss the nuggety gold, and you won't get a representative indication of what gold is there. So what we do is we take a bulk sample, which is what we've done, and that bulk sample, effectively, we extract high-grade, low-grade, and mineralised waste, and then we process it for a plant. Get an average, we produce a concentrate, that concentrate is processed, and then we back calculate a gold grade, which is all going very well. In addition to that, we are planning a 6,000 metre air core drill program about to start, I think, next week, all things going well. And the drillers are mobilising next week, so that's exciting times. We've got the bulk sampling program ongoing, the results coming out through there with the resource coming in the first quarter four. Sorry, I'm just getting the right quarter four. So hopefully by June this year, we should be able to give the market a resource on Revere. Concurrent with that, we're also testing the 7 kilometre strike of the Revere system, and that's going to add additional information to us. And we think there's a repeatability. We think the mineralisation repeats, and so we're very confident that we will identify, or if not connect, the current gold mineralisation system by this next program. So exciting times in relation to that. We just move over to the next page, and we've got, I've got the extent. I'm on page 10, Simon. I know you're just a bit ahead of me, but that doesn't occur often. But perhaps you could just get me back on page 10, and I might be able to, for the benefit of those who are listening. You can see what we're planning to do here. We're testing the strike to the north and the south. Interestingly, to the south, we have the Armstrong's deposit, which we have a first right to buy, and that has a copper gossan occurring at surface on it. So that's interesting. We want to test that, even though we haven't consummated that purchase yet. We have the option, but we're certainly going to test that as part of this exploration program, and obviously proceed to put that into the portfolio if it's successful. The fence line drill pattern is planned at 400 metres to 800 metres apart, but it'll probably be a little bit closer than that. And as I said, to identify a true size of the mineralised system. And as I said, the untested copper gossan. We move on to Mount Dimer. Mount Dimer, pardon me, is just out of Southern Cross. This was in EMC when we got involved in EMC. Very basically, historical open pit which was mined, and it effectively has a resource on it at 48,500 ounces at 2.1 grams, and about 3 grams of silver. So what the gold was last mined in 1996, and there was obviously gold prices were much less than what they are today, and obviously what we've done is simply come through and re-optimise that resource with a view to going ahead and mining it. So it sits on a fully granted mining lease. We're intending to mining. We're doing the pit optimisations. A mining proposal was submitted in August 24. We're hopeful within the next 3 to 6 months, we would suggest by Q4 at the latest, we should be in a position to commence mining at Dimer, which is a simple pit cut back mining of about a couple million BCM of waste to produce about 100 to 150,000 tonnes of high grade, circa 2.4 gram or thereabouts, a gold mineralised ore, and that material will then be sent to surrounding toll treating facilities. We're in discussions with Beacon, which is there, and we've also got some other people in Coolgardie that are interested in taking the material, and we're hopeful to get into. Very hopeful that once we understand the programming of our permitting, and with an absolute degree of certainty, we'll enter into some toll treatment agreement with one of those toll treating people. So all exciting stuff. It looks good, very good at these economics. It will generate a positive cash flow, circa about 12,000 or 13,000 ounces of gold, which is $50 million of gold. We're hopeful, depending on the toll processing costs. We'll dig it out in about 6 or 7 months and hopefully get it processed over that period. You can have a look at what we've got there. High grade intersects. It's just very simple pit cut back. Good gold grades. Very interestingly, we've got some good exploration targets which are very similar to what formed the basis of the mining of the current Taipan pit. So we're going to bring a drill rig in to do a little bit of drilling. I think that's planned for late April. That's just to give us a bit more certainty of some grade control. And we're going to drop a few deep holes into some exploration targets, which, as you can see just over the page on page 14, the resource is open to the south and strike and down dip. And so a little bit of infill drilling, as I said, and then some geochemical anomalies, which we certainly intend to test on the exploration tenement. So four priority targets appear to correlate nicely with some shear zone, very similar to what's occurring in the current pit. So if we just move, so that's the gold story. Gold story is very exciting. We've got the, I guess if you don't drill holes or you don't dig holes, then you're never going to find any gold, and it doesn't matter what the gold price is. If you don't produce any, then it's not relevant. So it's our intention to produce some gold, and obviously underpin a significant resource, a future resource, future development out of a resource at Revere. So I guess everyone would, the mantra, the narrative has always been about critical minerals, and obviously lithium, scandium, we've heard about all that, graphite for batteries. And we were very fortunate to pick up what we call the Mount Eden Critical Mineral Project. And Mount Eden is up the road again, just off the Great Northern Highway. And we've identified that as we originally identified it as a pegmatite, the occurrences of pegmatites, which were untested. And we went about testing for obviously lithium, and we found lepidolite. But interestingly, the history of Mount Eden is that it was one of the highest known occurrences of rubidium in the world. And yes, rubidium, not many people know about rubidium. It is a strategic mineral under the American DoD defense identified strategic minerals. I think it's also a strategic mineral in Europe. So what we did is we went about looking for lithium. What we found was high occurrences of rubidium, and we then turned our focus to delivering a JORC compliant rubidium resource on Mount Eden. 3.6 million tonnes at 0.22%. That puts it in some of the highest grade mined rubidium occurrence in the world. But more interestingly, it's the high grade zone of 1.3 million tonne at 0.33% that we're interested in mining. So no good mining something if you can't process it. So to that end, we then looked about, well, how do we process this rubidium material? And so we then tied ourselves up with the Edith Cowan University, and we've advanced the process, and I'll deal with that as we go. A little bit about rubidium on page 17. What is it? It's very important. It's a critical mineral. It's alkali metal, and it's really a cesium replacement mineral. There's not much cesium left in the world. Some of the biggest deposits of cesium and cesium polysite have now been mined out. So the world is turning to rubidium as a replacement for cesium. It sells for $1.2 million US a ton, and as you can see, it's used in a multiple sort of uses: defence and military, night vision imaging, radiation detectors, photoelectric tubes, very, very specialised. Communications, fibre opter. It's in nuclear power for enhancing uranium fuels, ion propulsion engines and atomic clocks. So very, very specialised. The market is very opaque, but as you can see there, our reconnaissance shows 4.95 billion in 24, growing to 8 billion by 34. We only want a very small parcel of that, and we intend to mine about 20,000 tonnes to produce about 100 tonnes of rubidium a year in our first. That's our first sort of project development scoping study that we intend to move to. So we've put together a world-class R&D team over there at ECU, and also we've got John Starrick on board, who is a renowned chemical processing engineer, well versed in these processes. So we are. The market is opaque, so very difficult to break into it. But nonetheless, we believe it's simply a supply constrained market and very opaque, and there is definitely a demand for the product. So I think if we can demonstrate that we're about to produce it, we'll get the market. So you can move over to page 18. I don't know how I'm going for time. Simon will give me the hurry up. But so what we did there is move, as I said, a resource, pretty straightforward. It occurs from surface. We've got 7,900 tonnes of contained rubidium. That's enough to keep us busy for a while. It's open along strike and depth, providing exploration upside and resource growth potential. So it's an open cut mining and low stripping ratio. So we've got a small phase 2 resource drilling program in Q2 25. That's actually to test a cesium target, as well as do some enhanced work on our rubidium resource. As I said, we've got a rubidium extraction flow sheet established for ECU. I think we deal with that as we move over through the presentation. As I said, highest grade rubidium deposit in the world. Not much to say about that, other than that you can be agnostic to size, but because grade, but if you've got grade, then you generally it forgives a lot of the parameters which you need to get into production, because high grade mines. And this is high grade mines much easier to get into, much more economic and much easier to get into production. So as you can see, we are uniquely positioned. There is no operating mines in the world for rubidium, only in China. Lots of people have threatened to go mining, but none of them really have got there. And obviously one of the problems has been the grade. We move over. You can't, having a resource is wonderful, but you need to have a process. And we went about trying to look at the typical processes of rubidium in China. Solvent extraction. Again, China deals with about 75 to 85% of the world's rubidium production. So we decided to tie ourselves to the ECU University. They have a wonderful facility there, and they set about trying to find a green process, which effectively was not using solvent, chemically aggressive solvent extraction, but using a simple process of absorption. I won't go into that because it's proprietary, but nonetheless, the important thing is that we successfully recovered rubidium and produced, produced rubidium chloride, which is a wonderful outcome for us. So patents have been filed on the process, moving forward with that. And we are now, the next step is that ECU will produce in late April, thereabouts, a scoping study, which will give us the economic analysis, the operational and broad range order of magnitude for operational and CapEx costs, which will allow us then to move to the next initiative, which is to build a pilot plant. And the pilot plant will effectively be almost on a commercial scale. Remember, we only want to produce about 100 tonnes of rubidium a year, which is circa around about 120 million US. As I said, we only mine 20,000 tonnes out of the deposit, and then we would move that to our pilot plant, which would probably build at 10 to 15 tonne per annum. That's almost commercial, and then we would expand at a later date. Lots of grant opportunities for rubidium because it is that strategic mineral, and as we know, in the backdrop of world geopolitics at the moment, there's an aggressive approach by the US, Europe, and other countries to diversify away from China. Obviously, that geopolitical posturing is going to get worse, and the strategic minerals are going to get more, are going to become more prevalent in terms of supply, and we believe that we're well positioned with rubidium to meet that market. So if we move on, what are the near-term catalysts? Very simple. I guess with gold, well, gold's at $4,715 Australian. So I guess if we perhaps if we do nothing, it might go to 5,000 or further. But the important thing is that we have a very, very, very good portfolio of gold assets. We've got the ongoing bulk sampling and gold bulk sample processing at Revere, which will lead to a resource in the near term. We're hoping by the end of Q2, or in fact it will be by the end of Q2. We've got a aggressive air core drilling program, 6,000 metres starting there. So there's results and news flow that's going to come through that through Q1 and Q2. Maiden Jork mineral resource, as I said, coming in Q2. Mount Eden, the scoping study and pilot plant planning with a view to grant funding to build a pilot plant, and obviously to link into some of the significant defence initiatives and grants that are available to us in the US. That's the intention, and perhaps tie up with a downstream midstream processor of rubidium chloride. But anyway, that's all to unfold, and it will unfold quickly once we get that report. Mount Dimer, well, very simple. We've got some infill drilling commencing, but more importantly, with Dimer, we're well approved. We're well along the road with the mining approvals, and we hope to get that in around about Q3 with an intention to start mining and producing cash flow. In the portfolio, we picked up some large exploration tenement a couple of years ago in the Northern Territory. We identified that as a vastly unexplored area. We've got that in the portfolio, and we've got some good assets at Muck and Boodin in terms of uranium, which we intend to look at corporatising. I should also say at Revere, importantly, and it may have been missed in the presentation, or I may have missed it, but very simply, we also have applied for mining lease at Revere. I mean, I know a little bit about gold. Well, I believe I know a bit about gold. I built Allied Gold and listed that on the Toronto Stock Exchange, and we were one of the few Australian companies listed on the main board of AIM. We later corporatised that to St Barbara, but we effectively started there in one of the hardest jurisdictions in the world, New Guinea, in the Solomon Islands. Started with 300,000 ounces and ended up with 8 million ounces in the portfolio. So we know a little bit about identifying gold resources. We know a little bit about building them on time and on budget. We know how to operate them, and we certainly know how to corporatise them. So, you know, there's a lot of good news flow coming here for Everest. We're active. We spend our money on the ground. By way of background, I come from a generational contracting company, earth moving bulk mining, so bulldozer driver with honours, so we're very what's the word I'll use? We're very diligent in how we spend our money, and we are the largest shareholder in the company, so we have ownership, so that's always a good sign. So I think that's our story. Strategic mineral exposure and excellent near-term catalysts for gold. So thank you very much for listening to our story, and I think we're going to throw it open to some questions.
Yeah, thank you so much, Mark. There's so much going on.
Very busy.
I'll let either Mark or Simon jump in as I ask the questions. The first one is, you know, as you mentioned, Mark, rubidium is not that well known, and also you can see there's a growing demand for it. So, I mean, why is it so rare? And the second part of the question is, what is like an average mine life of a rubidium mine?
Okay, okay. So sorry, I think the first question is, why is it so rare? It's produced as a byproduct of lithium mining. And effectively, when they produce lithium, they'll put a 44-gallon drum or 200-gallon drum there. I'm showing my age there. It is metric, a 200-litre drum, and they'll collect the rubidium, small portions of rubidium which fall out of the back of that process, and then it'll go off to be secondary processed, generally in Japan or in China. The reason it's rare is because the market is opaque. So that's one of the things. So when you've got a high value product, they don't want to let other people into that market. That's just basic, basic commercial and marketing. You know, keep it controlled. And so we don't know a lot about it in terms of the actual true tonnages used, but we do know there's a value to that market. And remember, we're only trying to produce about 150 million tonne of a forward-looking market of $150 million, I guess, or 120 to 150 million US dollars of a market that's currently worth 4 billion and going to 8 billion. So I think we're pretty well positioned. It will become more prevalent and more understood as the supply becomes more abundant, which is what we intend to do, and I think also as a replacement for cesium, which is a well-known mineral. So I think the question is and there I probably lost the second question, Mel, which was what was the second part of that question? Why isn't it mined? Is that was the question? Was that
the mine life?
okay?
You
The
know,
mine life of our project. Well, look, as I said, the current rubidium size of the market at 8 billion and at $1 million US might be sort of somewhere around about 800 tons to 1,000 tons. So, you know, when we look at what we're growing and when you look at what we're trying to do, we're only trying to capture sort of 100 ton of that market. So we're only trying to capture 10 or 12% of that market. So I think with the resource we've got at Eden, which is 7,900 tons of contained rubidium, I think I alluded to the fact that we'll be mining there long after we've left the planet. Small. We're very fortunate because we only have to mine 20,000 tons a year out of a high-grade core of 0.3 to 0.5%, and that gives us enough material to produce 100 tons. You know, taking into account some or less recovery. So yeah, so we'll be there mining for a long time.
Another question that's come through is, after the initial resource that you're targeting of 350,000, how big do you think Revere could actually be?
Well, look, I suppose I can talk openly here, and you know, but very clearly, you know, look, what we have is there's a series of the system is very, very large and it's active. You know, it's a hydrothermal at 32 meters. We have warm water, so that means the system is you know, continually it's active. So what that means is effectively water flows into this system, goes down all the way down to probably kilometres, and then percolates its way back up. So it's fluidizing and it's active all the time. So that's the first thing. We have a very, very active hydrothermal mesothermal fluidization occurring along the Revere shear. So structurally, it's all there. We understand its structure. I think what we're going to find that comes out of this bulk sampling program is we're going to find, we know from our previous 8,000 metre RC drilling program that the mineralisation repeats itself and goes down to 130 odd metres. And look, you can do the mathematics yourself, but we believe that this bulk sampling program has enlivened the size of the resource from what we might have thought to be high-grade vein mining. They will definitely occur, but now what we've got is we've got mineralised low-grade material. We've also got mineralised waste as well. So that's going to, when you run the model, you can imagine we were looking at a 15 centimetre sort of reef system. We've now broadened that right out, and that's going to run the model down to depth at 130 metres. Look, I think it's not unreasonable to expect, you know, more than 1 million ounces here. I suspect that if the geology hangs together, then we could be looking at multi-millions of ounces. It'll be a lower grade, and people will be confused with the grade, but the important thing you must remember, the current average global gold mining grade is it used to be 1.2 grams. I think it's down around about a gram now, obviously. So we think we'll have a big bulk mining operation, gold from surface, low strip ratio, and importantly, no chemicals. This is gravity gold. You crush it, you put it through concentrators, and gold cut, and you collect the gold in the concentrate and remove it. So yeah, I think multi-million ounces. I'd be disappointed if we didn't get 1 million ounces out of it, but I suspect it'll be more than that. Yeah.
You mentioned the Gecko plant. Is it leased or owned?
No, we lease that, and we've got a good arrangement with the people there. They'll keep it on site to, you know, we've done this program. It's fair to say that very few junior mining companies get the opportunity and, you know, and to leverage themselves. Of, you know, just by way of background, I come from, as I said, glorified bulldozer driver of honours, but we come from a private contracting company which has some 300 pieces of mining equipment and an associated expertise and systems which EMC is able to leverage off. We don't own the Gecko plant, but the point I was going to make is we have the ability to source equipment from all over the world, and that's an enormous benefit to EMC to have that expertise.
Will you continue to operate that, Mark, after the bulk sampling?
Look, I think what's going to happen, the current bulk sampling, we're in pit 2. We've just finished that excavation. We'll process, I think we've got about 7,000 or 8,000 tonnes out of that pit. Given the knowledge that we're developing from the initial pit 1 bulk sampling, which is nearly finished, we probably don't have to process all of that 8,000 tonnes in pit 2. And I think that will give us the repeatability and the knowledge of the resource that we should be able to pin together an inferred resource in conjunction with the 6,000, an inferred resource along strike from what we're doing. We'll get some indicated and inferred predominantly where we are now in this 700-metre zone, but this information will allow us to pin together with the 6,000 metres of drilling. I think a greater inferred resource, and because the Greco will be there and we're well set up with our own camp and everything there, we're able to fully test this with further POWs to dig out more material if required. Very exciting going to the south, the Armstrong's lease, which, as I said, we have under option, but nice outcropping copper gossam there, and as I did, and it's probably lost in the presentation, that we did test this area for Degussa style copper VMS occurrences, and we have some wonderful targets there. And hopefully, when we generate a bit more cash, out of either Taipan or Revere, when we go mining, we'll go back and test a lot of those because they are well deserved of further follow-up work.
I'm going to bring Simon into the party and throw you a question. In terms of the commercialization of rubidium, who will actually buy it, Simon?
So the market is wide and varied. At the moment, it's a designated critical metal in both Japan and the US. So we are in talks with varying stages of procurement in both Japan and the US, and I think that we have the largest indicator we have of strongest end demand is military industrial for rubidium. Look, we have had a couple of options or offers, if you like, to direct ship the ore, given the grade that we have at Mount Eden, but we consider that there's more value to add for the company by continuing to develop the product in conjunction with ECU's Mineral Resource Recovery Centre. So yeah, look, we'll be revealed as we go on.
1% recovery. Obviously, that's good because we probably wouldn't highlight that in a deck. What are we comparing that to, that percentage?
So I missed that question there, Mel. Was that to Mark or myself, or what was the question? So
the 91% rubidium recovery.
Yep.
That's obviously very high, correct?
Correct. Yeah.
And that's against, like, is that measured against peers? Like, how is that measured?
I think very difficult to understand to get any sort of measurement against peers. But look, anything above 90%, is good in any sort of mineral sort of recovery process. So I think we're still doing further work on that, where we think we can do a little bit of front end beneficiation in terms of that's mechanical beneficiation, screening, and maybe some ore sorting to put higher grade rubidium feed, run-of-mine rubidium feed into the actual chemical process. Yeah.
A couple of questions are coming, well, more than one, so it's obviously of interest to investors. The funding, particularly the funding of mining at Mount Dima, which is on the horizon. I'll ask you, Mark, how is it intended to be funded?
Oh, well, look, I think in all fairness, I think we are, we went out into capital raising, where there's very few, well, not very few, I guess the focus has been on gold. I guess there is a lot of people out there exploring for gold, but we're probably more advanced because we've got near-term cash flow with Taipan, and Taipan is pretty. It's a resource which is defined. We'll be able to debt finance that for various debt providers. We probably need anywhere between $6 to $10 million before we're into positive cash flow there. I mean, that's subject to final optimization. So I think that Taipan will get debt out of that. We'll get some debt provider in there and maybe a little bit of equity. You know what I mean? Most of the financing is the pit strip back to an open pit strip back. You know what I mean? There may be an opportunity also to do some type of arrangement with us, with my private company, obviously declaring a conflict-related party there to come in and come in and strip that back. You know what I mean? And help EMC get to that point. But there'll be no problem getting debt for that. I've raised over I'll stand corrected. I'll use the minimal figure in case someone wants to challenge me. I feel like Donald Trump, everything's challenged, but I've raised over sort of $300 million in the markets to develop gold projects and mineral sands projects. So we're well connected in that regard. I don't think funding will be difficulty. In relation to Revere, again, that'll be a low cost capital sort of project, and the only because it's gravity. It'll just be the scale that we need to get right there. And I think, again, there'll be a mix of debt and equity there. And in this market, I think there's lots, we're getting approached, getting approached every day by gold debt providers, debt equity providers to offer us money. So I don't think there'll be a problem. It'll be a mix of debt and equity. I mean, the Rubidium plant will be financed through R&D grants and also a contribution from us in terms of most of those grants are generally dollar for dollar, so the plant might be costing us estimated 5 or 6, standing corrected, of course. I don't have that number in front of me, but if it's $5 or $6 million, we'd have to contribute $2.5 million generally on a dollar for dollar grant. There may be some other initiatives if we get a DoD grant out of the US, but out of our contribution, we get 60% back from R&D research. So yeah, I think there's nothing. It's bite sizes. I mean, if you look at our total capital cost in the near term, we might need, $6 to $10 million, which will be debt funded for Dimer. There's probably no near term immediate requirement for funding at Revere. That would depend on the drill results. They may be suitably enhanced, suitably encouraging enough to go out there and raise a bit more money to accelerate that program and get a bigger resource. And I think Eden is again bite-sized at $2 to $3 million. So not a large capital requirement and easily funded by grants and debt, I think, and a bit of equity. No shortage to people wanting to give us equity. Well supported by our broker Taurus, you know what I mean, who have been wonderful at supporting us and got us this far. So we've never had any issue raising money. We're very prudent in how we spend our money, and people, I think, respect that as well. It's a result-driven outcome.
We're probably running out of time, so I'm going to finish off with a question of my own. What should shareholders be most excited about?
Well, what they should be excited about is that their money is being spent in the ground. There's no mines in St George's Terrace. If you want to visit us out in the back streets of Welshpool, bring a mask because there's lots of smog out here. But effectively, if I could just if EMC is Everest Metals Corporation, and what that stands for is if you've ever gone from base camp at Mount Everest up the hill, you'll find lots of dead bodies, and that's where ambition was confused with ability. And there's certainly, we don't confuse, and we have ambition, but we certainly have ability. So what shareholders should be well encouraged by is that in a short period of time, we've adopted the fundamentals: explore, get a resource, and then move to development concurrently. So we are a development company, we're an exploration company, but if you look at our MO and my MO in particular, we build projects. So they should be excited that they're going to be part of a gold mining production entity, and they've also got some exposure to a very unique strategic mineral, which will become more important in the near term.
Okay, well, I just wanted to say thank you to you, Mark, for joining us. Simon, thank you as well for joining us. If anyone does have any questions, we will send out a recording of this webinar, and we'll also have an email address for myself. So if there are more questions after this, then absolutely send them through and we'll respond to them in due course. But But yeah, thank you so much, Mark. Thank you, Simon. And we'll look to do this again in the near future.
Okay, thanks very much, Mel. Thanks everyone for listening.
Thank you very much. Yes, wonderful. Thank you. And thank you for everyone who participated. Bye now.
Thank you. Bye.